Hello, everybody. Dan Lucas here from Credo, and we're on day 8 of the 50 states in 50 days. And once again, I am coming to you from my studios in my vehicle. And today we're talking about South Carolina. And it was the 8th state admitted to the Union, and it was admitted on May 23rd, 1788. So a little less than a month than Maryland was admitted. And gosh, my best memory of South Carolina, I think I was about 12 years old, is the first time I'd ever been there. Went to Charleston and went out to eat, and never heard of grits before, because I'm from Chicago. You don't eat grits up there, or at least I didn't when we were up there. And I was actually scared to eat them because I thought they were like bugs or something, and I don't know why. Nobody told me exactly what it was. And I was scared to eat them, and then I actually ended up eating them, and I actually thought they were really, really good. And I never got to eat them again until I moved to Georgia. So I had kind of a long period there, but when I moved to Georgia, I was really proud that I knew what grits were, and was able to eat them. If you've never had them, they're really, really good, and they can make them all kinds of different ways. I don't know. I think they're awesome. So that was my best memory of South Carolina. So just peppering in a little information that you don't need to know. But what you do need to know is what these tax credits are in South Carolina. I'll tell you that so far, South Carolina has more tax credits than any state we've done so far, and by a big margin. Okay, South Carolina has a ton of tax credits. And so what I'm going to do is I'm going to go down the tax credits that I think are most relevant to this audience, small business owners, self-employed entrepreneurs, stuff like that. And then I'm going to come back and just kind of list off the other ones just to be complete. But there's like literally over 100. Okay, there's a ton of them. And there's refundable and non-refundable. Again, the refundable ones means you don't have to have an income tax liability to actually benefit from them, and you can actually just get the money back that you spent even if you don't owe tax. Okay, so that's really cool. But they have both. They have them of both types. Okay. All right, so let's start in on this, and again, I'm gonna keep this to things that I think are most relevant, and then I'm going to come back and finish that at the end with all the rest of them and just give you a list. Okay? All right. So first one is that we have something called a new jobs credit. And it's for certain employers that create and maintain 10 or more new full-time jobs, right? So it looks like it's a bulk of jobs. And you can't get a credit that exceeds 50% of your tax liability. It's based on the year that you created the jobs, and you can carry them forward 15 years. Okay, so it is not a refundable credit, it's a non-refundable credit, but you can use it for 15 years and just keep hitting at least half of your tax liability in the state of South Carolina. Okay, so that's a big deal. All right, but again, it looks like you got to hire 10 or more new full-time jobs. So if you're a growing business or starting up or whatever, and you are creating these jobs, you definitely want to look at this. That's a huge credit, big benefit there. Another one is called the Small Business Jobs Credit, and that one is for qualifying small businesses with 99 or fewer full-time employees who create and maintain 2 or more new full-time jobs. Probably a lot easier hurdle to get over, and same deal, 15-year carry forward, up to 50% of your South Carolina tax liability each year. Okay, nice little benefit. So one of the 2 of these, be looking at if you're hiring people. Okay, if you're hiring people, look at tax credits, federal and state, general rule. Okay. All right, you've got the accelerated small business jobs credit, qualifying small business with 99 or fewer full-time employees who create and maintain 2 or more full-times each year. I'm not really sure how that is different necessarily from the small business jobs credit, but it says it's accelerated. So I'd have to dig into that a little bit, but either way, it's a very, it's a similar kind of credit. You just have to look at what's the difference between just the small business jobs credit and the accelerated jobs credit. Okay, let's see. New jobs credit professional sports teams. Ooh, professional sports teams with at least 150 full-time employees in South Carolina. Wow. So don't know if that means that if you own a professional sports franchise, it doesn't say it has to be like major league of any, it doesn't have to be like NHL or MLB or NBA. It just sounds like a professional sports team. So, if you start, it could be AAA, it could be one of those semi-pro, I think, football teams, or even if let's say you base your operations in South Carolina, but your team is somewhere else, right? It could be worth looking at. So that's pretty cool. Let's see. I've got a corporate headquarters credit. Corporations who establish, expand, or add a corporate headquarters in South Carolina that creates 40 new full-time jobs. Kind of what I was just mentioning as far as on the sports team, right? Maybe you add a corporate headquarters to your business. Maybe your business is not in South Carolina, but maybe you should be in South Carolina. And they're trying to obviously attract businesses to set up shop there, okay, create jobs. So a lot of job creation credits going on in South Carolina, all right? Let's see, they've got a capital investment credit. Taxpayers who place qualified manufacturing and productive equipment into service. And it looks like they have different kind of tiers or different categories. So all different kinds of equipment get different types of credits. The longer the useful life of the property, so probably the more robust the equipment, or which usually translates to more expensive, the bigger the credit. Okay, so if you're manufacturing and you're putting equipment into service, you're going to want to look at this capital investment credit. All right, let's see. They've got the research expenses credit. Taxpayers who claim a federal income tax credit for research expenses, like we talked about before, double dipping credit. Very nice. You can get 5% of qualified research expenses in South Carolina, which, the basic, if you think about it, South Carolina's tax is, about 5%. It kind of matches up, right? So 5% doesn't sound like a lot, but remember, we're talking about state income tax, so it's not as much as federal anyway, okay? So we're looking to kind of nullify our tax best way we can, okay, with basically found money. Carry forward of 10 years, right? Carry forwards are awesome. That means that if you spend a lot in 1 year, you don't have to worry about the tax year. You can bank these things and carry them forward, okay? That's huge. And if you've done that before, you know it's huge. But if you haven't, please know it is huge. You can bank these things and you can carry them forward. I've done a lot of that myself in Georgia. It's really nice. It's really nice to do my taxes. I get depressed when I find out what my federal liability is, but then when the Georgia liability comes out and I see that I've got bank credits that are going to knock the whole thing out, it feels really nice. Okay, trust me. All right, they got some more historic credits and stuff. I'm going to go back to that at the end. We've got the commercials credit. Okay, so remember we talked about that when we were looking at film production and media credits and stuff like that. This is for production companies who produce one or more commercials in South Carolina with an investment of $500,000 or greater. Yeah, that's a lot of money. But if you can get creative on this, you might be able to partner with people. You might be able to pull some things together. I think I can think of some different ways to get something like that. But you get 10% of the expenses in South Carolina credited back to you, and there's a carry forward of 10 years. Okay, so you can do a one-time event and knock out taxes for a 10-year period. Okay, that's the thing you have to keep in mind, is that if you can pull some of these investments together and make them make sense, it's not just for that year. Okay, you can have like tax-free living in the state for 10 years carrying these things forward. Okay, so a little bit of planning and a little bit of creativity, I'm not saying we do anything wrong, but a little bit of creativity can really lead to a really lucrative type of arrangement for yourself. Okay. All right. Now we have the motion picture credit. Taxpayers who invest in a company that develop or produce a motion picture or a company that constructs, converts, or equips a motion picture production facility in South Carolina. Again, taxpayers who invest in a company that does that carry forward of 15 years. Another carry forward. Okay. And that one you can use up to 50% of your tax liability each year. Okay, we have the venture capital investment credit. That's taxpayers who lend money to the South Carolina Venture Capital Authority. Super cool. I have never heard of this. I'm going to be looking into this myself. Super, super cool. The amount, it's basically, you get a credit amount of the amount of the principal loan plus interest. Can't exceed 20 million total in any year. Boo-hoo. And you get a credit certificate issued by the South Carolina Venture Capital Authority. Really cool. I'm going to look at this. I might even do a separate video on this one and come back to this, okay? If you're interested in that, please put that in the comments, and maybe I'll do a separate webinar on this one or something. That is cool, and that is, man, that is something that, and it's unlimited credit carry forward. Unlimited. Lifetime carry forward. Big thumbs up on that. All right, let's see. We have the qualified retirement plan contribution credit. Individuals who contribute to a qualified retirement plan taxed by another state. Okay, no carry forward on that one, but something to look at if you have a qualified retirement plan and you know that your contributions are being taxed in another state. Okay, let's see. We have the retail facilities revitalization credit. No, it says that one's expired, so we'll skip that one. We have the, let's see, corporate tax moratorium. That is, corporations who create and maintain at least 100 new full-time jobs at a qualified manufacturing facility. It's not a credit, but it provides a 10-year moratorium on corporate income taxes. Huge. Okay, huge. If you qualify for this and you're not getting it, you're making a huge mistake. Let's see. We've got we talked about this. I can't remember what state it was, but we've talked about this before. There's an effluent toxicity testing credit, not effluent toxicity testing credit. It's for manufacturing facilities that comply with whole effluent toxicity testing, and it's 25% of the qualifying investment. Let's see. We have the excess insurance premium credit. That's for individual taxpayers who pay residential property and casualty insurance premiums in excess of 5% of their adjusted gross income. You're not getting that. You need to get that, okay? That's a simple one. And that is a $1,250 credit with a 5-year carry forward, okay? All right, the next one is the credit for shareholder of S corporation banks. All right, so if you're a shareholder in a bank, I know a lot of people are. A lot of people do that on a passive basis. You can get 100% of the taxpayer's share of the S corporation bank tax paid. Pretty cool. Let's see. Gosh, they have so many credits. Amazing. Clean energy credits. Angel investor credit. So and this is part, I guess, of the High Growth Small Business Job Creation Act, and I guess it's been extended through December 31st, 2025. And this is for angel investors who invest in a qualified business that has been certified by the Secretary of State. These qualified businesses are primarily engaged in manufacturing, processing, warehousing, wholesaling, software development, information technology services, research and development, and you can get a credit of 35% of your investment. That is awesome, okay? I'm really starting to see now why I've seen a lot of people move to South Carolina. I've seen friends move to South Carolina from all kinds of different states, especially entrepreneurs, but you know, some of these people, now it kind of makes sense, tend to be kind of quiet about their money, I think, and they might be moving to South Carolina to maybe take advantage of a lot of these things here, and they're kind of keeping it on the down low, if you know what I'm saying. Let's see. We also have the tuition tax credit, which is it says it's qualifying students attending a South Carolina college or university. So, you know, if you're a business owner or entrepreneur and you want to keep getting smarter and smarter and smarter, tuition credit. Tuition credits have been kind of under fire, and I think it's been sort of, you know, one of those things that was considered more like a rich people or sort of an elite type credit, which is, you know, everything political kind of goes in cycles, but a lot of these types of credits have been kind of under fire that are, I think, kind of seen as more favorable to upper income kind of class, but they're still keeping in South Carolina, okay? So, and in this one, you get a credit up 50% of tuition paid, which is huge. And let's see, yeah, that's going forward. There's some other rules for different years going back, but one's going forward. That's what it is. All right, let's see. So let's go back to the beginning now, because those are the big ones. But again, if you're in South Carolina, there are so many credits, it's absurd. So if you live there and you don't think you're taking advantage of tax credits, we'd love to help you, because it looks like there's probably enough in the pot for us to help you and recover fees for doing so, and at the same time, you're going to get a ton of benefit on it. So it's definitely a win-win. I mean, there's a lot of meat on the bone here for someone in my profession to help someone like you. So, and now I can see why people are moving there. Okay, I mean, gosh, maybe I need to think about moving there. Georgia's pretty business friendly, but not like this. Okay, so here's some of the other credits we can talk about. They have the drip/trickle irrigation systems credit. I don't know, that might have something to do with hemp or something. Like, I know a lot of people are into hemp and cannabis now. They have the credit for state contractors subcontracting with socially and economically disadvantaged small business. Again, kind of an opportunity zone thing, probably. They have the water resources credit. They have the scenic rivers credit. They have the infrastructure credit. And it looks like that's a corporations who invest in qualifying infrastructure projects dedicated to public use or a qualifying private entity. They have the child care program credit, which is employers who give child care program for their employees. Okay. God, there's something in here for everyone. There's the plastics and rubber manufacturers credit. I can't remember what state it was, but there was one state that was really generous to plastics. Can't remember if it was New Jersey or Connecticut. Maybe it was Massachusetts, I'm not sure. Forgive me. Again, I'm doing these videos informal and live, and so I can't remember, but the plastics one is definitely a rare credit. They're doing the family independence payments credit, the community development credit, the recycling facility credit, the qualified conservation contribution credit, and again, that's related to land, conserving land. Double dip on that one, because there's a federal credit as well. They have the brownfields cleanup credit. We've had something like, we've talked about that before, it's an environmental type credit. The certified historic structure credit, the certified historic residential structure credit. It's historic upkeep of things. We've talked about that before, very common in 13 colonies, the original 13 colonies. Textiles rehabilitation credit. The health insurance pool credit. The South Carolina Quality Forum credit, which I'm not sure what that is, but could be related to quality control or something like that. They have the port cargo volume or port transportation credit, the premarital preparation course credit. That's definitely a first. I've never seen that kind of thing before. The mercury switch disposal credit, the alternative motor vehicle credit, and so that's for individual taxpayers who place a qualifying vehicle under Internal Revenue Code Section 30B into service. So that's a double dipping credit. Got an electric car. If you're not getting this, I don't know why, but if you're not getting it, you just happen to make a mistake or something you overlooked, you got to get this. There's the Industry Partnership Fund credit. There's a solar energy, small hydropower system, or geothermal machinery and equipment credit. There's an ethanol or biodiesel production credit. There's a renewable fuel facility credit. There's a residential retrofit credit. There's an apprenticeship credit. That's for taxpayers who employ an apprentice. How cool. There's a biomass resources credit, a venison for charity credit. I love venison. Never thought you'd get a tax credit for it. There's a fire sprinkler system credit, an energy efficient manufactured home credit, a clean energy credit, an abandoned building revitalization credit, an educational credit for exceptional needs children's fund, a solar energy property credit, an alternative fuel property credit, a South Carolina earned income tax credit, an agribusiness income tax credit, a preceptor income tax credit, a South Carolina housing tax credit, credit for taxes paid to another state, which is not atypical, a nursing home credit, a lot of people investing in those, a lot of people getting nice returns on those. Get tax credits on top of that. Wow, pretty cool. And then we have an anhydrous ammonia credit, so that's this is for resident taxpayers who use anhydrous ammonia for agricultural purposes. There's a milk credit, so that's remember the previous video we had a dairy farmer type credit, but pretty sure that was Massachusetts. They have something similar in South Carolina. Classroom teacher expenses credit. I know that they had killed that on the federal level, but it looks like in South Carolina they still have that. They have the parental refundable credit. Remember, refundable means you don't have to owe tax to get the benefit. Get some money back, right? Get a check from the state even if you didn't pay anything in. Those are awesome, okay? That's not getting a rebate. That's just free money, okay? And that's for parents of qualifying exceptional needs children who pay tuition in an eligible school. I know a lot of people that have kids with exceptional needs. And so it goes up to $11,000 of the cost of tuition. So you need to be looking at this if you have a kid with exceptional needs. And then there's the motor fuel income tax credits, and that's for South Carolina residents who purchase gas in South Carolina and have preventative maintenance costs for vehicles registered in their name. And they've increased it every year, and right now it looks like it's at about 7 cents a gallon. It might even be higher. Because that says in 2020 it was 7 cents a gallon, and in 2021 it could even be higher because it's been going up. Wow. My mouth is dry after talking about all these credits. South Carolina is unbelievable. I was surprised that Maryland was so generous, because typically what you see at states that have surpluses and typically tax, they have a tax, but they're very comfortable as far as their state budgets. They typically have a lot of generous tax credits because they like to give a lot of that money back, but not just necessarily hand it back to people. They try to put it back in a way that I think they consider good stewardship, is to like make life better, make life more prosperous, make the environment better, things like that, to make a better place to live. Okay, those states typically have a lot of credits. Maryland surprised me because they had way more credits than I thought they would, based on what I knew about their state and their government and their budget deficit. But I gotta say, so far South Carolina is the best. South Carolina is by far, so far, I reserve the right to change my mind, so far the best. I thought Georgia was good, and Georgia is good. South Carolina's better. Okay, wow, really good. Did I say I like South Carolina and I thought it was good? Can't remember. Did I say that? I think I did. Okay. You might want to move to South Carolina. I'm thinking about it myself. Because I like grits, and I want to go eat some more grits. But I also like money, and so I'd like to save more money. And even get some refundable credits where I'm actually not paying any tax. They're actually paying me. That sounds like a good scenario. Okay, this video was long, but that's because there's a ton of credits in South Carolina. Hope this helps. Again, if you know anything more about what I've been talking about, please comment, please share information, please post questions. If you post questions, we will read them. We will dig into them for you, whether it be me or somebody on my team. I want to get this information out there. It helps me learn. It helps my team learn. And we can even post some things online so that everybody can learn from this, okay? Because you got to look at this as kind of a community thing where, if we're just communicating, which doesn't cost us anything, especially in the short span of time it takes to communicate with each other, we can save a ton of money. Okay, so let's try to work on that together and do that together. All right, thank you so much. I hope you had a great weekend, and I will see you tomorrow, where I'm going to talk about New Hampshire, and we'll see what we can learn about New Hampshire. New Hampshire's always seems to have a nice bucket of surprises no matter what's going on, so I'm curious to see. I'm kind of familiar with the tax credits there, but as I'm digging more into these deeper, just to do these videos, I'm learning a lot more. So I'm actually enjoying myself too, and this is really good for me. So anyway, adieu, and have a great rest of the weekend.